Everything money. I see what you're doing, boys. You're grifting. You're grifting. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm the author of the book Stop Being a Broke Loser. It's on Amazon. And I finally got around to watching Everything Money's recent video about all of a sudden being interested in Palantir stock. So what we're going to do is we're going to watch tidbits from the video, and I'm going to tell you why their analysis is absolutely freaking stupid. Let's go ahead and watch what Everything Money has to say, and then we'll do some Palantir analysis ourselves. And let me pose this question to you. Has anything that I've criticized Palantir about changed in the slightest? No! But apparently Everything Money, something magically changed with the company. Oh, I know what it was. The stock price went down. Well, guess what? I don't think you can value this company, in my personal opinion, because it isn't profitable. But whatever. Let's go ahead and watch the video.
Analogies. This is a company in which I criticized from the stock price because that other guy on YouTube was talking the world of it at $25, $30, $40. He said, this is the stock of the future. I sat there and said, listen, the founder is a guy I respect a lot. Peter Thiel, however you pronounce his last name. Great, brilliant man. He started PayPal. He was involved with Palantir. He was partners with Elon Musk at PayPal. However, you can overpay for a good thing. That is what I want everyone to take away from all the videos we do. There's such a thing as a great company that you can overpay for. Look at the early 2000s. Amazon was a phenomenal company with a phenomenal future. It fell from $113 a share down to $6. Why? Very simply, overvaluation. So here's Palantir, a company that I think has a great future. And I've now, because the stock has fallen 80% from its high, I'm now interested in the company. Mo?
So he's interested in the company because the stock has fallen 80%. You know what else has fallen 80%? Tattoo trucker, sweaty putrescent nutsack. AMC stock. All these other clown stocks have also fallen 80%. Am I buying them? No, because they're unprofitable, share diluting trash. Because even though they fall 80%, they could fall 80 more percent. They could even fall 100%. So, and you'll see why Paul is interested. It's because the stock went down. Because when he actually does his little stupid DCF calculator and the numbers he punches in, it doesn't make freaking sense, okay? You'll see what I'm talking about. Let's keep watching the video and I'll keep giving you my 2 cents.
What do you think about this whole about face that I've done on Palantir, a company that still isn't generating any profit? Talk about here, U.S. commercial customer count increased by 250%. So one of the things that's interesting is they're decreasing their average sale size, which some people would say that's bad. I don't think that's bad. That is part of their goal. And the reason...
My name is Ivan Barrett. I'm the founder.
Reason being is they're trying to get more sales in, so it's harder and harder to get the big whales out there. You've got to go for smaller and smaller sales, which I'm perfectly all right with. Mo, what do you think?
I like that.
Yeah.
I like that they're doing that. I also like just that you said U.S. commercial.
Yeah.
I really like that they're kind of, I get a little apprehensive about companies that are so entrenched in government contracts. That's why my biggest apprehension was I thought they were like 80, 90% government. Now I'm seeing they're not. That makes me a lot more comfortable.
Yeah, but even if they were all government,
I mean, you have the government behind you, so
and the government needs a lot of data solutions.
Correct.
I mean, look at all the things that we're trying to solve: Medicare, Medicaid, Social Security, all these issues we have. I'm a big believer in we can use data to solve a lot of those problems, and that's what Palantir is here to do. It's been around.
Okay, so the main point of that was that they're increasing their customers. And, they're diversifying a little bit, which is great. They should have government and private sector, whatever. The main argument here is revenue my avenue. Did you guys catch that? The main thing is they're getting more customers, which means more revenue my avenue. Nobody is criticizing that Palantir has good revenue growth. Absolutely nobody. Who is criticizing Palantir has good revenue growth? Now it's slowed down year over year. I don't know if that's going to change in the future. It might go up. But that's not the problem with Palantir. The problem is it's been unprofitable since its freaking inception. Oh, but they have positive cash flow because they have massive stock-based compensation, which means dilution because they don't want to pay their employees with more money, more cash. That's why they have positive cash flow. They have never been freaking profitable. That's the issue, Paul. The revenue, my avenue could be 1,000 billion%. But if you're never profitable, if you never make money, I don't get it. God. Let's keep watching.
Revenue growth was 25% a year, according to analysts, for the next 5 years. So I'm going to go a little bit lower for 10 years, and I'm going to go high side 22%. Middle, I'm going to go 17, low side 12. So I'm just, and I think 12% super low, but I'm just trying to be conservative to start from there.
Let's see where the numbers spit out.
Now, profit margin.
Oh, boy.
Yeah. Oh, boy, because we don't have enough data here.
Yep.
So, and as they ramp up, they're going to spend more and more money. So I'm going to go with 10, 20, and 30% on the high side. Okay. Because I think 10 years from now, it's possible, but they're not going to have 30% now. So you have to be a little bit more cautious to begin with early on. Free cash flow margin. I'm actually going to do the exact same thing. Now, I will say one thing. Look at free cash flow last year, 15% of their revenue. It's only 1 year.
Yeah.
But that's pretty awesome.
That's pretty good.
That's showing pretty high potential for the company.
Out of everything I've looked at on this company, the free cash flow is the surprise to me so far.
Yeah. Free cash flow has been awesome. Now, PE. If it does, remember, we have PE. You want to factor your PE based on growth potential and based on ROIC and its moat. If Palantir makes it, I think this is going to be a very solid company and they're going to own that market potentially. Tom Nash was not wrong about this company could be the leading company of their industry in the future. What he was wrong about was valuation. Okay. Here now, I'm looking at this going, okay, if they do hit these high numbers of 22%, who's going to compete with them? Peter Thiel is an incredibly smart individual, and I'm a big believer in him. By the way, he also loves cryptocurrency and Bitcoin. I was reading his book, 0 to 1. He talks about in the book, and I think he wrote the book in 2011 or 12. He talked about a digital currency.
Does anybody, and we'll finish the fundamental video, the fundamental analysis part of that with the stock analyzer tool. Did anybody see the issue with their discounted cash flow? Okay. Well, number one, they mentioned the free cash. Wow, they have really high free cash flow. That's because of stock-based compensation expense, which leads to dilution. And what did they put for the profit margin? Oh, they put positive numbers for the profit margin, and they just made up some numbers. If you put a positive number, if you're using their discounted cash flow tool, and I have copied it. Okay, I literally copied it, and I got the same freaking numbers they did, so I know I got it right. And it's common sense. If you put that Palantir is profitable today with a 10 to, what do you have, 10, 15, 20, something like that, profit margin, it starts giving you positive future cash flows from today. From today. They are not profitable. So whatever freaking number he gets on there is complete and utter BS, because in reality, they have a negative profit margin. And when you discount negative numbers, you get a freaking negative number, okay? The valuation thing that he's doing is completely fake. It doesn't work for a company like Palantir. I guess there's other ways. Oh, EBITDA, just an EBITDA, blah, blah, blah. I'm sure that's a way to value Palantir. I'm sure people use it. Price to sales by sales. But come on, man. You cannot put a positive profit margin in there because it's not profitable. And if you start discounting the future cash flows, you're already off massively. If you really wanted to project Palantir's value or the present value of the future cash flows, you'd project each freaking individual year, or even if you want to get detailed enough, each quarter, and then you would discount the future cash flows back to the present, okay? But it doesn't freaking work what they're doing. And their software doesn't allow you to do that. You can't go in there and fiddle with the numbers. My Excel sheet, which I made in freaking 10 minutes, 15 minutes, it's the same thing as theirs. You can fiddle with numbers, okay? And you can do that yourself. Just saying. So the whole assumption of, oh, it's profitable starting today, and it's going to be this PE in, 10 years? Come on, man. It's freaking ridiculous. Let's keep watching.
to replace actual US currency, which is kind of interesting. But I'm going to go 14, 18, and 22. 14, 18, and 22. Now for my desired.
Both of our parents were from another country.
They came from India with, as my parents like to say it,
desired annual return. Mo, you tell me what you're thinking. I'll tell you what I'm thinking. Don't look yet, but I'm going to write down what I'm thinking. Don't look.
Okay. I'm going to go 20, 25, and 20, 25, and 30.
Oh, wow. That's higher than mine.
Yeah.
Mine was 15, 20, and 25.
Oh, wow. 15, really?
Because I think these low assumptions are very low.
So I do think they're low, but I guess the whole speculative nature of the entire play makes me jack it up a little bit.
Split the difference?
Sure.
17 and a half, 22.5, and 27.5. Hit the analyze button. Now remember, guys, whatever happens here, if it's all green, it doesn't mean go out and buy. I don't know if these numbers are reasonable. We have analyst expectations. Analysts also think that NEO is going to be a $400 billion company in revenue in the next 5 years, which I don't believe at all.
And
it could happen.
Rivion's doing $88 billion.
And Rivion's going to do $90 billion in revenue in the next 5 years. We don't necessarily believe that. However, for a smaller company like this, I'm hoping they're more intimately involved with the company and can understand it better. So, stock price is currently 8.
I haven't looked.
150, 320, and 560.
Okay.
Now, I do think we were very high on the desired annual return. And I do
Well, ladies and gentlemen, it looks like Palantir is a buy at like what, $3 or something like that. With that discount rate they used is insanely high. And even then, they're discounting fake cash flows that don't freaking exist. Okay. So later on in the video, Paul says, "Oh, I wrote some puts." And what that means is he's sitting there in cash, waiting for Palantir to hit a certain price so that he gets exercised and is forced to buy the shares. Think about this, ladies and gentlemen. When you're in a bear market, okay, you don't think there's not other opportunities out there that you could potentially invest in instead of just sitting there in cash during a freaking bear market with a puts waiting to freaking buy the stock? And honestly, like, how many puts did you write, Paul? Honestly, because I noticed your buddy LaFufu, he has like what, 10K in Palantir. It's almost like you made that video and you're claiming you wrote puts. And you know what? I'll give you the benefit of the doubt. I bet you did. What if you only wrote one contract? Okay, that's what is the stock price right now? $8. That's $800 of cash you have to put aside. You probably make more money from that video, which sponsors your freaking software, than you could ever possibly do from Palantir. Okay, that was complete and utter BS. All right, Palantir is an interesting company, and I think it's a lot better than a lot of the trash out there. Okay, yeah, it's unprofitable, but I'd rather buy Palantir than Tattoo Truck or Sweaty Nutsack. They have a high gross profit. Okay, that's great, but it's all based on the accounting. Sometimes like a software company can have a high gross profit, and that's great. But if they have a bunch of other expenses just based on how the cost of goods sold is allocated, if it's not profitable, the gross profit doesn't matter. Okay, it's still losing money hand over fist. Now let's go look at the the history of Palantir's financials. Okay, yeah, it's $7.50. Let me make sure I'm sharing my screen. $15 billion market cap. Yeah, this thing is absolutely freaking collapsed. Let's go look. So we can see they have massive revenue growth and they have negative earnings per share. Negative. And they have, let's see, an improving gross margin. Now, Paul mentioned their gross profit, right? That was never the problem with Palantir, okay? Did you not notice the gross profit the first time? Nobody is criticizing Palantir's gross profit. It's a great gross profit margin. That's not the freaking problem, okay? Operating margin, negative. Profit margin, negative. Oh, but they are free cash flow. Oh, wow. I wonder why there's such a discrepancy between profit margin and free cash flow margin. What's going on there? It's almost like there's a bunch of expenses that are hitting the income statement that are not hitting the statement of cash flows. But remember, accrual accounting actually matches expenses to revenues. Cash can be manipulated. I like the accrual basis of accounting better because it better reflects the actual fundamental profit and loss of the company. Okay. So you look at it, it's like, okay, there's some great things to like about this company. It's interesting. And I think they have a great balance sheet from what I remember. Let's see. Yeah. They don't really have a lot of debt. No, I mean, their balance sheet's fantastic, except for the massive losses they keep incurring. Their cash flow, they have positive operating cash flow and positive free cash flow. But like I said, that's from stock-based compensation. Look right here. Look at this. What happens when you have stock-based compensation? You get dilution. Okay. And did they even look at the shares outstanding in that video? I didn't see that. Why was that a problem before? And now it's not a problem now. Can someone explain that to me? I mean, let's go ahead and look at the share change. Where is the shares? Am I blind? Here it is, okay? Look at the freaking shares change on a quarterly basis. 1.8, 1.9, 1.96, 2,000, 2036, 2055. Dilution. But they have operating cash flow. Because of that. That is why they have positive operating cash flow. And if you can prove me wrong, go ahead and do it. Please. But that's the reason why. You can see it on the statement of cash flows. So, I don't know, man. I mean, Palantir could, be a 10x stock one day. I don't freaking know. It's an interesting company. It does have a lot of things going for it. But at the same time, there's issues. There's big freaking problems with this company. And that's why the market has absolutely hammered it. Okay? But Paul, I honestly think he's just joining the Palantir grift because if I talk about Palantir, I get lots of views. I don't know why I'm making him sound like Jeremy, but y'all get my drift, okay? Let's do some comments. The decline of everything money has just been like epic. Like it's I was wrong. Well, I wasn't wrong necessarily. I think when Seth was there, it was a little bit better. Now that he's gone, it's a crap show. The new background angle is fire. You really like that background? Looks like ass. Bro, when cut? Never. New camera, bro? Actually, no, this is the same camera. I don't know why it looks so different now. Can't believe you got Seth fired. Well, I don't think it was me. I really don't. I think him going on potentially, whatchamacallit, Capital Mindsets channel. Ha ha ha. Grifter. Palantir has a cult following on YouTube. These grifters say that will be a $1 trillion company in 10 years. It will compete against companies like Microsoft and Google. Well, if you have a DCF tool, right, and you just pretend it has a profit margin, it has a 20% profit margin starting today. Yeah, you'll get some crazy buy points. I mean, but it's fake. It's not real. Woke up this morning and added myself some good old Palantir on a Saturday. Asked Paul if he likes Voyager shares or steal at $0. Well, I projected Voyager's profit margin to be 10% forever into the future. Okay. Put a shirt on. Why does everybody tell me to put my shirt on? I'm not putting my shirt on. If you've been watching me long enough, you either accept it or you don't, okay? You either like me being shirtless and you continue to watch me, or you go watch some other clown that tells you garbage advice, but he wears a shirt. Even financial advisors, they have suits and ties. So you should go listen to that guy. Yeah, I'm a financial advisor. You want a whole life policy? You want to buy my investments, bro? Yeah, I'm a financial advisor. Yeah. Yeah, go listen to him. He wears a freaking suit, bro. Bro, you remind me so much of Bill Burr. It's hilarious. It's on Amazon. Well, he does stand up. I don't have time for that. Too cheap to install on a free ad blocker. Look, this business is ultra profitable, okay? My YouTube profits, my only expense is like taxes, basically. That's basically it. Palantir is a $5 stock. I mean, I'm just saying, like, their analysis, like, oh, it has revenue and a high gross profit. We already knew that. It's always had good revenue growth and high gross profit. That's not the problem. Bought 350 tattooed chef on the weekend. Let's see. No one had ever here saw their software or use it. How do these idiots evaluate this? You can't put random profit margins. Like if you have a company like Facebook, right, or Meta, you can like look at their past profit margins And then you can kind of do some research on what they're doing now to see if anything would potentially affect that, or like look at the macro. But you kind of have an idea roughly of what Meta's profit margin is, okay? Assuming like nothing material changes in the future. You could potentially pick a reasonable profit margin assumption. But when you do that with Palantir, it doesn't work. It doesn't add up. That's why I don't touch those clown stocks, because they're evaluated based on other metrics, because you can't value them based on profit because they're not profitable. I mean, if they at least use like only free cash flow, that would have made more sense to me. But if they put in a random freaking profit margin, I thought you kind of liked Palantir. I mean, it's an interesting stock, but it's just not my type of company, okay? It's just, show me some freaking profits. You can wait until a company becomes profitable. Like, I think it was Amazon. Amazon was unprofitable, I think, till like 2003. I mean, don't quote me. But they had a massive crash after the dot-com bubble, and then they became profitable. And I remember I did this a long time ago, around 2003. And look how Amazon's done since then, okay? Just freaking wait until they show they can actually be profitable without diluting you, okay? That's their problem. Stock-based compensation. Stock-based compensation. That's why they have positive cash flow. Oh, cash flow. Whatever. Pay your employees a little bit more. I don't know. Buying Palantir, supporting government surveillance. I don't care about that. Net income negative 250. Yeah, it's bad. Net change in cash 67%. Is that really over the last well, they're not, if their cash is going down, it's not from their operations. They're maybe doing acquisitions, let's see. Because they have positive cash flow from operations. So they're not like, from a business, from an operation standpoint, they are not a cash burning enterprise, which is better than most other companies because of stock-based compensation. But their cash could go down for other reasons. Let's see. Let's look at their balance sheets. Yeah, their cash went up a little bit. 80 million, 83 million. And then their operating cash flow was 62. So, and they got a little bit from investing. They probably sold some investments and a little bit of financing. There you go. So, I mean, they're not burning cash, but that's just, like I said 1,000 times. Stock-based compensation. Strongman works as a small account. I think he has enough knowledge to do tax returns for small. I'm getting there. I'm getting to the point where I think I'd be pretty confident with most small businesses. Now, if it comes like this complex like corporation with all these, intercompany transactions, and no, I'm not doing that. Love your content. Thank you. And just give me like 5 years of experience in the tax industry. I'm going to be a god on freaking YouTube. You think I'm good now? You wait till I get real freaking experience with accounting. Just saw their video right now and bought some more Palantir. You sound like a AMC investor. I think after Tesla gets shut down and the hype torch to lead the degen investor cult will go to Palantir. Well, that's a investment thesis if I ever saw one. Wow, didn't notice that. I don't know what you're referring to. Love Strongman, love Palantir in my heart. I mean, you can speculate on it. That's fine. But it just pisses me off that like Everything Money's analysis was stupid. Commercial customer growth for all the SPACs they invested. And that's another thing. Yeah, I remember they had like these massive like write-downs because of they invested in these companies. They invested in a bunch of garbage and all those stocks collapsed and all their freaking earnings collapsed. Like, what are you doing? Why are you buying these trash companies, Palantir? Seriously? It's like, can you trust the management after they did something stupid like that? I completely forgot about that. Everything Money really turned into Everything. Yeah, they've declined. Let's see. Seth was the dumb one. Yeah, he was dumb. But he bought everything, but he brought everything together. Now they look like goofballs. Yeah, Mo doesn't know what he's doing, man. At least Paul, like if I were to like debate Paul, I think he could like hold his own. Mo, it would just be torn apart. Like he would just be like a freaking alligator versus a baby. Like it just wouldn't be funny. Facebook was about to reach $1 trillion valuation. Yeah. People think like US stocks can't collapse like that, or they think that can't happen to Microsoft or Apple or Amazon. It can happen to any one of those stocks. But everyone's, oh, just buy macro stuff, bro. Just buy QQQ, bro. Whatever. Global diversification. As far as unprofitable play goes, is Palantir the worst? No, there's worse. Their revenue growth, their revenue's good. Their gross profit's good. They have positive cash flow. But there's more to it than that. I just wanted to let you know I have about 8 or 9 businesses upstairs. Palantir's Kathy Wood garbage. Lastly, I heard she was on you know what watch. Now she's grifting on Titan Invest now. Their 2-year run of share dilution during the time when their share was matched seems to have finally stopped. That's a good sign. Well, now the dilution is coming from stock-based compensation. I had to sell my Palantir holdings last before the big drop. I had enough. The risk reward was not worth it. Been buying VT with that cash though. VT is a beautiful thing, man. Like, what is the date today? Yeah, I had a freaking VT purchase yesterday. $500 every 2 weeks. VT. And I'm not joking. I'm not selling that for 30 years. 30 years. I don't care. Okay? It's beautiful. I was 3 years old 30 years ago. I don't really know. I don't just know nearly. Oh, long-term investing. Yeah. 5 years. Yeah, long-term investing. Ugh. I just don't know nearly enough about their tech. If you don't understand the company, don't invest in it. I mean, like, you can just max your tax advantage accounts and buy an index fund. There's nothing wrong with that. You'll probably outperform all these clowns. I like Tattooed Chef more than Palantir. Now, I disagree with you on that. If I had to choose one that was more likely to survive, Palantir, because Tattooed Chef is a disaster. Like, they are burning. God, they're actually at risk of bankruptcy or a massive dilution event. Palantir is not at risk of bankruptcy. They have positive cash flow, and they have a delicious balance sheet. Like, it's delicious. They got a ton of cash, not much debt. The balance sheet's not the problem. Tattooed Chef has a horrible balance sheet. God awful. And their cash burn is freaking awful. Okay? That's the difference. All right, well, that's it. That's my thoughts. I mean, I'm not surprised. You know what? Maybe I should turn bullish on Palantir. And maybe I will at some point. I don't know. Show me some profits. Stop diluting. I mean, yeah, there's potential in that company. But, all right, guys, that's it. Just wanted to bash on everything money because why not? And I'll give you a Jeremy outro because why not? Cheers.
Bye. I know I'm a grifter strong, man. You could lick your hand and smack me in the nutsack. Thank God for Tesla, my Esla, and you, strong man.